Hey everyone, and welcome back to the Teaching Tax Flow podcast, episode 136 today. We are looking at Venmo. Yes, you heard it right, Venmo. One of the most popular payment, peer-to-peer, business-to-business transaction DIY platforms out there. But what we're looking at today are some 2025 rules that the IRS has in place and how they look at this platform, and there are similar ones out there. But before we do that, as always, let's take a brief moment and thank our episode sponsor.
This podcast is brought to you by Legacy Lock. If you are new to estate planning or simply need to review your current plan, Legacy Lock makes it as easy as pie. Legacy Lock is a unique platform that enables you to easily complete your attorney-drafted documents conveniently from the comfort of your home or office. Your first step to this peace of mind is simply visiting teachingtaxflow.com/legacy.
Hey everybody, and welcome back to the podcast. Now today we're going to talk about a topic I know Chris Picciero is extremely excited about. I'm just kidding. He's not too excited about it. Who is really excited about talking about a topic, right? If you're getting any revenue, say, who wants to be taxed on that, right? So we're going to talk about a lot of the stuff, or I should say a little bit about it, because there's a lot of stuff going out there about it, but we just want to give you really the nuts and bolts, if we will, around platforms such as Venmo. You have PayPal, Cash App is one of them, and there's a whole ton of these things out there. So what we're going to get into, again, not too deep into the weeds, but what you can expect a little bit about some changes from the IRS as it relates to these platforms. So as I mentioned, I know it's his favorite topic to discuss. Chris Picciero, welcome back, buddy. How's it going today?
It is going very well. How are you doing today?
Doing good, man. Doing good. I did not, you know what? I should say I will Venmo you a couple bucks for doing this topic with me. I know. And I know you're not excited about it because there's a million other things in your world that excite you way more than this.
That's true. But you know what? We have to think about the teaching tax flow community and what's best for them. And this is something that's going to affect a lot of them. As you know, first of all, thank you so much for watching. Thank you for listening. We truly appreciate you. Without you, we wouldn't be doing this. We want you, if you're not already, we want you in the Defeating Taxes private Facebook group. Go to defeatingtaxes.com. Remember, you can always post anonymously. The other thing, which I'm going to call this is our fuel tank, John, our YouTube channel, Teaching Tax Flow YouTube channel. That's our fuel tank. So please pump some gas into our fuel tank. Guess what? It's going to be free gas. It's not like what you're paying at the pump right now. All you have to do is check it out, give us a like and a follow, because that helps us bring you the content. And this makes me maybe tackle some topics that aren't my personal favorite, but I know that the community needs it. So thank you, first of all. We are loving all the interaction. And, and again, if you have any questions about this, go to 2025.tax. Just drop an inquiry in. We're happy to help. Now, this topic, we call it the Venmo tax. Social media calls it the Venmo tax. But what this is it's something that has come about over the last few years with the IRS. It's a topic that we actually taught in our tax season updates. I'm very honored to be one of the National Association of Tax Professionals instructors. I got a chance to speak to about 300 to 400 tax professionals last year. I think we're going to probably hit more than that this year. And this was a topic. So peer-to-peer, tax professionals are also learning about this topic and educating ourselves. When I taught this topic, I like to call it the Taylor Swift tax. Now, Taylor is, to the best of my knowledge, and because I have a 15-year-old daughter now that gives me updates, she is now focusing or she is now not on tour anymore, so I don't know that I can call it the Taylor Swift tax. Maybe we'll find something else. Maybe we'll call it the Savannah Banana or the some other touring organization's tax. And you might say, well, why is that? Well, let me paint a picture for you, John. I know you're a Swiftie. You've been outed many times as a Swiftie. It goes along with some of your other questionable music choices, which will remain unnamed. But let's say John says, you know what? My daughter's daycare. I'm getting all the dads together and we're going to go to the Taylor Swift concert. And it's a very expensive concert to go to. But so he buys 10 tickets and for $300 a ticket.
That's a steal.
It is a steal, actually. And then he tells the other dads, don't worry about it. Venmo me $300 for your ticket. No big deal. John's not in the business of taking groups to the T-Sizzle concert or doing special events. However, there's an unintended consequence. John will now get a 1099 at the end of the year, uh, most likely, because of his Venmo activities. And there's a lot of innocent things happening out there that are reporting nightmares for taxpayers. I'll give you a couple more examples that I've personally witnessed in our private CPA firm. One, the Cub Scout popcorn or Girl Scout cookie leader, right? You go to Kroger, you go to your local grocery store, you buy either Girl Scout cookies or Cub Scout popcorn. You Venmo someone, and it's typically one of the parents of the participants. And they bring in thousands and thousands of dollars of Venmo. They're not in the business of peddling popcorn or cookies, and they transfer that money over to the organization to purchase said product. They have made no money. They're not in the business of doing it. However, they could very well be getting tax forms in the mail. That can happen all the time. The final one I'll talk about is for those of you that play fantasy football, or let's say you are in a pickleball league. Our pickleball league is a couple $100 a year total to be in, very modest. But we've got about 90 guys in the league. That's a significant amount of Venmo transactions occurring for no real profit for the person organizing it. So those are the unintended consequences of what we call the Venmo tax. So what are the rules? Well, we know that these digital payments have become more popular and popular, and the IRS is seeing that there could be income that is going unreported. Now, we call it the Venmo tax. John, you remember when we were kids, of course, I'm a couple years older than you, and you happen to enjoy reminding people that I'm a decade older than you, although you just hit the odometer. So we would say, hey, can you pass me a Kleenex? Can you throw me a Coke? Right? We know Kleenex is really a facial tissue. So we know Coke is a soft drink. John, we're from Michigan, so we call it pop. People down here in the South call it soda. I don't understand that, but that's a whole nother episode.
I love throwing people a curveball. Even when I lived in South Carolina, it's like, oh, is it a soda pop then? They're like, well, no, it's just soda. Well, to me, it's just pop. So I'll compromise. But
exactly. And a lot of people say, hey, I'll have a Coke. They might have a Pepsi. They might have an RC Cola. The point is, when we say the Venmo tax, it applies to Venmo, PayPal, Cash App, and several other what are called TPSOs, third-party settlement organizations. All right, and these are the organizations that collect money from one party, transfer it to the other party. And now here in 2025, a new threshold for 1099-K reporting does take effect. A 1099-K is the tax form that is required if you go over the threshold for third-party network transactions. So we'll put a link into the show notes to a 1099-K, and technically it's a payment card and third-party network transactions tax form. So there are a lot of people that are doing some what we call innocent activities. There's John, your daughter's getting older. You're going to realize, as you and your wife, I know you're very involved with the community, and you're going to continue to realize that no good deed goes unpunished. That is 100% true. So as you volunteer for things and, hey, I'll be the classroom dad or the classroom mom and Venmo me money for the teacher gift, and all of a sudden I've got a tax form. So the 1099-K is a tax form you will receive if you go over what we call the threshold, and that threshold did change for 2025. It actually got reduced. What threshold means is that if you go over that dollar amount in these TPSO transactions for the year, you will receive a 1099-K.
And I'm really glad, Chris, that you did go over to it before we discuss what those thresholds are actually. So I'm glad that you brought up that Kleenex example, right? Because I feel like these platforms are so user-friendly, right? It's like, I wouldn't say careless or anything done. Well, let's be honest, people are using them maliciously, whatever. It is what it is. You can't stop everybody. But it's been it's almost like part of our daily lives, right? Where nobody, I was gonna say nobody, but I can't tell you the last time I've actually even given any form of currency tangible to somebody, somebody splitting a lunch bill or something like that, right? So these platforms are out there and people are using them more and more and more. And I would probably bet, I'm just going to randomly come up with a number, that probably less than like 1% of people that even use them know that this is even a thing.
Absolutely. I
Promise.
mean, John, I've been thinking about just in the last month. My wife and I used Venmo to tip a uh a valet driver when we went out to dinner one night. We're not John. I'd rather walk a few blocks, but we were in downtown Nashville, and kind of dressed up. So we had, tipping someone at a hotel that's helping you with your bags, typically Venmo. I've got another example. We have this restaurant will not be named. If you want to know though, and you're in Franklin, Tennessee, if you want to know the best Mexican restaurant, best margaritas by far, John Trapolsky has graced this place with his presence. The one drawback, which could be a positive, is bad Wi-Fi. It's probably not.
They are missing. Well, me and you are like notorious for finding ways to drag our laptops and our business conversations to the most non-business friendly establishments. But yeah, that one I was disappointed in, man. Nothing's better than like salsa and Wi-Fi, right? Like
But this
this goes
Oh, I
together.
know. Well, it's salsa, you get a little salsa on your computer. And John, we've been to this establishment many times. In fact, one time, it's quite a it was the anniversary of the establishment. They had really good deals on margaritas. They had a bunch of outdoor seating, and it was a very interesting experience. We'll say that. But we're gonna leave. That has nothing to do with 1099K. But here's why it does. In all seriousness, because my wife and I like to go to this set establishment, um, we received gift cards from people to this establishment. So when we went to use our gift cards, no problem. We cashed out, we paid for our meal, uh, and we wanted to put a tip on it. Well, they said, just with our computer system, you can't tip using your gift card, which is kind of weird. Usually you can. Well, we don't carry cash, and this poor server just helped us. So we asked him, and he's like, "Oh yeah." My wife says, "Do you have Venmo? Yeah. Can we at least Venmo you a tip? Sure, no problem." But think about that. We had to tip this server in Venmo. Who knows how many times that kind of stuff happens? So this
Right.
is just
Or
little
like live
examples.
music venues. I feel like everybody that hits a
Oh,
stage, that's like their way to do it. That's like a request, the old request buckets, where you drop a piece of paper, write it, fold it in there, throw it in. Now it's like,
hmm
don't tell us your song unless you Venmo us. So,
correct. So as early as 2023, the threshold. So when as you listen to this, think about threshold is when I have. It doesn't mean that's when you have to report something. We're going to talk about that in a couple minutes. It means when you're going to receive the 1099K form. That threshold for 2023 was $20,000 of transactions and 200 of minimum transactions. Okay, so that kind of eliminated a lot of people from getting the 1099K. In 2024, it was $5,000 of transaction of report transfers or transactions, and there was no minimum transaction. So it's solely based on the amount of transactions. For 2025, only $2,500. So you could easily see how that can happen. Especially, man, I mean, think about like going out to, how many times have you guys gone out to dinner with like 4 or 5 couples? Someone, puts it on their card and everyone Venmos the money. $2,500 can add up pretty quickly over the year. And then you have a 1099K. And here's the kicker. In 2026, that threshold dips down to $600. Now, we'll see if the patch comes through. It has happened quite often because you got to imagine these third-party settlement organizations really don't want to issue all these 1099Ks and track everything. But those are the rules for when a 1099K is issued. Now, I'm going to pause for a quick second. The issuance of a 1099K doesn't dictate if something's taxable or not taxable. It really plays a role in how we handle our tax return. If we're issued a 1099K and we're not in the business of doing something that we should be reporting that as taxable income.
mhm. And really, Chris, I mean, I could see this, to kind of play devil's advocate a little bit for the IRS, right? So anybody that's listening to this as a taxpayer, please do not, you know, knock me over on the street for saying this. But really, I wouldn't say it's I'm not gonna say it's a good idea all the way around, but for them, it's a very beneficial tool and a move, I think. I mean, and I don't know how I feel about the number, obviously, or the number of transactions, but think about it, right? Like, you have garage sales doing a couple $1,000s. You have people selling things on Marketplace. You have all this stuff. You have some companies I know for a fact paying their contractors with Venmo or PayPal or something. So it's smart on their part again to kind of really look at this as like, okay, this is really flying under the radar. We know it. How are we gonna, collect on that basically?
Right? I mean, think about garage sales. When we were a kid, we would have 3, 4 families coming together and have one monster garage sale. And of course, there was no Venmo then, but now you would probably have one Venmo account and people are shifting money back and forth. So again, 1099-K reporting is autonomous from reporting it as taxable income. But if you get a 1099-K, you have to deal with it, or you will probably get a letter from the IRS, and they are not going to give you the benefit of the doubt. They're going to say that it's taxable income. So remember, you have to you report as a U.S. tax resident. You report your gross income. You report rather your income from all sources. So when we talk about these 1099-Ks, which of these transactions are actually taxable? So which ones are reported as taxable income on your tax return? I'm going to give you 4 most common examples. One is going to be your freelancers. We love our freelancers, our gig workers here in Teaching Tax Flow. So it could be a tutor, it could be anyone doing some side hustle, or rather, in segue of gig economy and side hustle. So you got freelancers are kind of separate than the side hustles and gig economy, Uber, DoorDash, those kind of things. A lot of times those are people are paid, tipped in Venmo. If you're selling goods for a profit. So John, there's a rumor that we might be writing a teaching tax flow book. If we sell it online and get Venmo, then that's a good sold for profit. That's taxable income. If you're selling things on Facebook Marketplace for profit, that is taxable income. If you sell your kid's old bike, that's not a taxable income. It's kind of like a garage sale situation. But you might sell some, you've got to look at the situation and are you selling things for income in professional services? So those are all things that are typical transactions that occur on a 1099-K that are taxable. Now, there could be some non-taxable reporting, and that's where it gets sticky. You get a 1099-K and you're not in the business of selling things, but you just happen to receive one due to a variety of reasons. The top 3 ones are going to be personal reimbursements. Like I said, splitting. Here's a great one, John, splitting rent, right? Let's say you and I rented a condo and you Venmoed me $1,000 a month and I paid the $2,000 of rent. I'm going to get a 1099-K. I'm not a landlord. We're just sharing
Right.
expenses.
I can only
Um,
imagine the volume of transactions that you talked about a little bit earlier. I mean, I personally, I don't use Venmo a whole lot. I just, call my wife and say, "Hey, there's $50 at the counter." You Venmo somebody. But it's, like, if you're in college, if you're at a college campus, hitting 2 to 500 transactions is I mean, you probably do that in a semester. Like,
Right, and now it's just a matter of the money. Now if you have one transaction for $2,501, you're gonna get the 1099-K. Yeah, the splitting of expenses. Because think about something real quick. Let's say, John, um let's change the factional. Let's say you bought a condo. It's like your real life situation. You put it on Airbnb and you rented it out on Venmo. Or you rented it out as a short-term rental. I mean, if you went through Airbnb, I don't know that the Venmo you. But the point is, now you're in a for-profit activity. So the tax reporting is completely different than splitting an expense. So you have to dive into what that activity is. But 1099-Ks, hey, you could definitely get one just due to personal reimbursements. It could be gifts between family and friends. I mean, you could have a benevolent grandparent that gifts you $3,000 easily. That's not taxable. Or transfer between personal accounts. What if you're transferring money from your personal account into Venmo or vice versa? So now what do you do, John? What do you do if you receive a 1099-K and you are not in business.
And really, Chris, with this too, it's, it's great that they kind of separate, right? Taxable and non-taxable. If they didn't do the non-taxable side, I think we have a whole other situation on our hands. But really, at the end of the day, even if everything you do is non-taxable throughout a year, right? It does add that layer of complexity to filing your returns accurately, right? So I can see this being a thing. And now playing devil's advocate on the taxpayer side, right? Like, what a great tool, though, that we have these, because basically now the individual can, in theory, you're being able to accept credit card, debit cards, even though, somebody's loading their account and then it's transferring to you. But like, it really has pushed us from a little bit more of a cashless, economy, really, in a sense.
Right.
So it's the technology, I think, is incredible. I think it's great how now it interacts with things. I love it, of course, because my local hardware store, now even lets me do Apple Pay. So I'm excited about that. And I get points back on it too. So I'm a happy camper. But,
Well, you got to
yeah,
think
this
about
is
this.
interesting.
Remember, everyone has to pay tax, has to report their income. So if you're in business, if you get paid on Venmo or not, you should be reporting all your income on your Schedule C if you're self-employed, or let's say you're selling personal assets for a capital gain or loss, you still might be reporting it on Schedule D. What happens if you get a 1099-K and it's simply, let's think about that roommate example, right? Or the cookie example or the
Mhm.
popcorn example. The first thing you should do is you should contact the TPSO and let them know, hey, I shouldn't have gotten a 1099-K. I'm not in the business of selling Cub Scout popcorn or, pickleball league funds. That being said, the chances that the TPSO are going to, in a timely fashion, change their reporting might be small. So if you do get one, my best advice would be put it on your tax return as other income and then back it out for the same amount and simply write an explanation with your tax return, 1099-K, 1099-K received in air, uh, funds simply a expense sharing between friends. Don't just not put it on your tax return.
Absolutely. Absolutely. And I think this is really good for us to, dive into and cover again, because there's so many people that use this, right? And another bonus to this just being in existence, right? Not the reporting side of it, but just the technology, right? Is now you can't have somebody really like couch surfing at your place anymore, saying like, "Oh, I forgot my wallet." Be like, "I've seen you on your phone, man. Like, I see you. So, shoot me my $25 you've owed me for 6 months."
Absolutely.
And it is great. And yeah, Chris, I'm glad that we kind of, wrangled you into this one. I know you have many other topics, as I mentioned, that are way more exciting to you, but as you alluded to at the beginning as well, so many of our community members use this. I mean, down to really younger children. I wouldn't say children. I don't know what actually, I mean, is it like a certain age to actually have a Venmo account? I'm sure, all the way up to, you know, people who have more than enough money to pay for stuff or could used to
Right.
carry a wad of cash in a rubber band. Now they're using something like this. So it's great that we went over this. And yeah, I guess we'll kind of sit tight and ride the pine and see where things go if that changes, right? The little patch you mentioned.
Exactly. Or if it goes down to $600 threshold as expected, we're gonna have a lot more reporting, and that's why there's no such thing as an easy tax return.
Ooh. On that note, we should make one of these days like hug your favorite CPA day or something like that. But take care of your tax professional because they take care of you. But awesome. Hopefully you guys enjoyed this topic. Again, we always welcome any ideas you guys have, any questions you have, shoot them over. That's where we get this content from, as Chris had mentioned as well. And as always, we look forward to our next topic on the Teaching Tax Flow podcast next week. Different date, same day of the week, completely different topic. Have a great week, everybody.
The content provided is for educational purposes only. We encourage you to seek personalized investment advice from your financial professional. For all tax and legal advice, please consult your CPA or attorney. Investment advisory services are offered through Cabin Advisors, a registered investment advisor. Securities are offered through Cabin Securities, a registered broker-dealer. The content of this podcast does not constitute an offer of securities. Offerings can only be made through an offering memorandum, and you should carefully examine the risk factors and other information contained in the memorandum.